In a world where money makes the world go round, it's astonishing how little we truly understand about the financial system that governs our lives. We're led to believe that success is measured by the size of our bank accounts, the value of our assets, and the prestige of our jobs. But what if the very system designed to help us achieve financial freedom is actually trapping us in a cycle of debt and dependency? The truth is, the financial system is rigged against the average person, perpetuating a never-ending cycle of consumption and scarcity. From the moment we're born, we're indoctrinated into a culture of materialism, conditioned to believe that happiness can be bought and sold. We're encouraged to take out loans to pay for education, to buy homes, to start businesses, and to consolidate debt. The result is a population drowning in debt, with the average person owing tens of thousands of dollars. The banks and financial institutions reap the rewards, collecting interest and fees, while we're left struggling to make ends meet. But it's not just the debt that's the problem, it's the mindset that comes with it. We're taught to measure our self-worth by our net worth, to equate success with wealth, and to believe that the only way to get ahead is to climb the corporate ladder. The financial system preys on our fears and insecurities, selling us get-rich-quick schemes, promising overnight success, and convincing us that we need the latest gadgets and trends to be happy. The reality is, true freedom and prosperity can only be achieved by breaking free from the shackles of debt and the mentality that comes with it. It's time to question the status quo, to challenge the system, and to seek a new path, one that leads to true financial independence and a life of purpose and fulfillment. The financial system, a complex web of institutions, rules, and power dynamics, has been designed to keep most people trapped in a cycle of debt and financial insecurity. At its core, the system is based on a simple yet ingenious principle: to create an illusion of financial freedom while maintaining control over the masses. The average person is led to believe that they have the power to make their own financial decisions, to invest, to save, and to spend as they see fit. However, this perception is far from reality. In reality, the financial system is rigged against the majority, with the rules of the game dictated by a small elite of powerful individuals and institutions. The system is designed to perpetuate inequality, to concentrate wealth and power in the hands of a few, while keeping the rest of the population in a state of financial subservience. The mechanisms of this control are subtle yet pervasive, woven into the very fabric of our daily lives. One of the primary tools of this control is debt. Debt is presented as a necessary evil, a means to achieve financial goals such as buying a home, starting a business, or funding education. However, the truth is that debt is a trap, a never-ending cycle of interest payments and fees that can quickly spiral out of control. The financial system encourages people to take on debt, to live beyond their means, and to sacrifice their long-term financial security for the sake of short-term gratification. Another mechanism of control is the manipulation of financial information. The system is opaque, with complex financial instruments and terminology that are deliberately designed to confuse and intimidate the average person. This lack of transparency makes it difficult for individuals to make informed financial decisions, leaving them vulnerable to exploitation by financial institutions and other predators. The financial system also perpetuates a culture of consumption, encouraging people to spend, to buy, and to accumulate material possessions. This culture is fueled by advertising, media, and social pressure, all of which contribute to a sense of dissatisfaction and discontent. The result is a population that is perpetually seeking to acquire more, to keep up with the latest trends and fashions, and to measure their self-worth by their material possessions. Furthermore, the financial system is reinforced by a network of institutions and power structures that maintain its grip on society. Governments, central banks, and financial regulatory bodies all play a role in perpetuating the system, often under the guise of protecting the public interest. However, their actions frequently serve to consolidate power and wealth in the hands of the elite, while maintaining the status quo of financial inequality and control. As a result, the majority of people remain trapped in a cycle of financial insecurity, unable to break free from the shackles of debt, consumption, and manipulation. The consequences of this system are far-reaching, affecting not only individuals but also communities, societies, and the environment as a whole. As we delve deeper into the inner workings of the financial system, a complex web of mechanisms and institutions emerges, designed to maintain control and perpetuate debt. At the heart of this system lies the concept of fractional reserve banking, where commercial banks are allowed to lend out a significant portion of the deposits they receive, creating new money in the process. This means that for every dollar deposited, the bank can lend out several dollars, earning interest on each loan. The borrower, often unaware of the true nature of the transaction, is essentially paying interest on money that was never actually there to begin with. This creates a self-sustaining cycle of debt, where the need for constant growth and expansion is paramount. The system relies on individuals and businesses continually taking on new loans to service existing debts, fueling an ever-increasing spiral of borrowing. The banks, in turn, reap the benefits of this arrangement, accumulating massive profits from the interest payments. Meanwhile, the majority of people remain trapped, struggling to make ends meet as they attempt to navigate this labyrinthine financial landscape. One of the primary tools used to maintain this system is the concept of compound interest. By charging interest on both the principal amount borrowed and any accrued interest, lenders can generate enormous returns over time. This can lead to a situation where the borrower ends up paying back significantly more than the initial loan amount, often to the point of becoming overwhelmed and defaulting on the debt. The consequences of this can be severe, resulting in damaged credit scores, repossession of assets, and even bankruptcy. Furthermore, the financial system is designed to encourage consumption and materialism, rather than saving and responsible financial planning. The widespread availability of credit cards, personal loans, and other forms of debt financing has created a culture of instant gratification, where individuals are persuaded to purchase goods and services they may not necessarily need. This not only perpetuates the cycle of debt but also fuels the growth of the economy, as people are incentivized to spend and consume. However, this comes at a great personal cost, as the pressure to keep up with the latest trends and must-have items can lead to a never-ending cycle of debt and financial insecurity. The effects of this system can be seen in the stark contrast between the haves and have-nots. While a small elite reap the benefits of this arrangement, accumulating vast fortunes and wielding significant influence, the majority of people are left to struggle, barely scraping by. The financial system has become a powerful tool for social control, maintaining the status quo and preventing meaningful change. By keeping people in a state of perpetual debt and financial insecurity, the system ensures that they remain focused on short-term survival, rather than challenging the underlying structures of power and inequality. As we continue to explore the hidden truth behind the financial system, it becomes clear that the need for reform and change has never been more pressing. As we delve deeper into the inner workings of the financial system, it becomes increasingly clear that the game is rigged against the average individual. The wealthy elite and large corporations have a stranglehold on the economy, and they use their power to maintain their grip on the flow of money. One of the primary ways they achieve this is through the creation and perpetuation of debt. By encouraging consumers to take on credit card debt, mortgages, and other forms of loans, they ensure a steady stream of revenue in the form of interest payments. This not only generates massive profits for lenders but also creates a cycle of dependence that is difficult for individuals to escape. Furthermore, the financial system is designed to favor those who are already wealthy. The stock market, for example, is a game that is heavily skewed in favor of institutional investors and high-net-worth individuals. They have access to advanced trading algorithms, insider information, and other resources that give them a significant edge over the average investor. This allows them to accumulate even more wealth, which in turn gives them greater influence over the economy and the political process. The result is a self-reinforcing cycle of wealth and power that is nearly impossible to break into. Another way the financial system keeps people trapped is through the manipulation of economic data and the dissemination of misleading information. The unemployment rate, for instance, is often touted as a key indicator of economic health, but it is a highly misleading statistic. It does not account for people who have given up looking for work or those who are underemployed, and it masks the true extent of economic suffering. Similarly, the concept of inflation is often used to justify austerity measures and reductions in social spending, when in reality it is often a result of corporate price gouging and profiteering. The financial system also perpetuates inequality through the use of tax policies and loopholes that favor the wealthy. The wealthy are able to exploit these loopholes to minimize their tax liabilities, while the average person is left to shoulder the burden of taxation. This not only reduces government revenue but also perpetuates the concentration of wealth among the elite. The result is a society in which the rich get richer, and the poor get poorer. It is a system that is fundamentally unjust and perpetuates the status quo of economic inequality. By understanding how the financial system is rigged against us, we can begin to see the need for radical change and the importance of creating a more just and equitable economy. The question is, what can we do to break free from this cycle of debt and dependence, and how can we create a more equitable financial system that works for everyone, not just the wealthy elite? As we conclude our journey into the intricacies of the financial system, it becomes evident that the mechanisms in place are designed to maintain a status quo that benefits a select few at the expense of the many. The perpetual cycle of debt, the manipulation of interest rates, and the artificial creation of wealth all contribute to a complex web that ensnares individuals, limiting their financial freedom. The system thrives on the concept of scarcity, fostering an environment where people are pitted against each other in a relentless pursuit of limited resources. Meanwhile, those at the helm of this system accumulate wealth and power, often through means that are both legal and illegal, yet always hidden from the prying eyes of the public. The consequence is a society trapped in a never-ending cycle of consumption and debt, where the dream of financial independence becomes an elusive fantasy for the majority. It is crucial for individuals to understand these dynamics, to question the norms, and to seek knowledge that empowers them to make informed decisions about their financial lives. By doing so, we may begin to dismantle the barriers that prevent true economic liberation, paving the way for a more equitable and just financial system.